Nvidia's conference call is concluded. The stock is pretty much break even in after hours. Tesla, as I believe, is one of your biggest, if not the biggest, AI stock of all time, biggest AI applier that is down about 0.5%. So what's the deal? What's going on here? What was said on the conference call? What could be next for markets? Nvidia, yes, saved the day again for AI, and a lot of people were speculating that if Nvidia somehow were to miss or give us bad guidance, like, you're going into a full-blown crash for markets. So I do think this was an important event, and I do think it will be important for Tesla. Now, Tesla just can't get out of Tesla's way, and Tesla hasn't done anything. You just get good news after good news after good news, and the stock continues to fall. So I'll explain that, what's going on there, and everything you need to know heading into tomorrow, because you're going to get a lot of data coming tomorrow morning. And of course, we are going to go over Nvidia's numbers, what their actual numbers were. Long story short, they were good. I want to start with a summary of the conference call, because that's really the most important thing for Nvidia. That's what everyone was paying attention to. Nvidia's CEO Jensen Huang says, quote, "No technology has ever had the opportunity to address a larger part of the world's GDP than AI. We're really just 3 years into that journey. I'm fairly sure that we're at the beginning of this new era." I think the word fairly sure kind of turned some people off when he said this, but overall a very powerful statement. And if you don't want to, mislead people, because you can never be 100% sure of anything in life, fairly sure is an okay word, but not the strongest choice here. So let me go ahead and save you like an hour of your life and just give you a summary of the conference call. Nvidia says, quote, "AI has gone mainstream, and almost everything a customer service provides has AI as a core. We are still at the beginning of this new transition, though, because there are still decades of data centers that still need to be changed over to this new technology. Consequently, we had another record quarter. Data center revenue more than doubled year over year, Hopper 200 demand continued, and Blackwell ramp started. And we were able to deliver above our expectations. We continue to expand supply to meet demand for Blackwell, including infrastructure sizes with clusters of 100,000 GPUs or more. New models require 100x more compute per task than one-shot inferences, like a Google search for that matter. And Blackwell was designed just for this. This will eventually go to 1,000 times and millions of times more than today in our future. Despite our outrageous prices, we are able to improve productivity and improve costs for our customers. We have driven a 200x reduction in inference cost in just the last 2 years. We are going beyond data centers, though, because every single AV company is developing on Nvidia. And there is also robotics. Export controls still make it difficult in China, where competition is tough, and we don't see this growing anytime soon. Spectrum X is also gaining in the Ethernet space, including Stargate data centers. Cisco is also integrating Spectrum X into every industry. Gaming sucked, though, with revenue down 11% year over year, but this was due to supply constraints. Margins were down sequentially as we ramp Blackwell, and this should continue to decline as Blackwell continues to ramp. Margins will likely continue to remain low later this year, but once we are fully ramped, we can begin bringing down cost. Whether you are testing, scaling out inferencing, or using deep thinking, the compute continues to increase, and Blackwell is designed to perform among all of these. That is why our systems are so popular. We still have a pipeline of new faster systems too, and Blackwell Ultra will be announced later this year. The architecture will be the same as Blackwell, so it will be easier for us and our customers. Just wait for the Vera Rubin, which comes after that. Meanwhile, there are a lot of people designing chips, but there still has to be a business decision made about deploying that chip. And come on, no one is going to choose something other than Nvidia. And yeah, that was a pretty good conference call summary from Earnings Whispers. Nvidia just said that nearly every AV company is building on Nvidia, with the AV/robotics market set to hit $5 billion this year. That is nothing, literally nothing, a literal drop in a bucket of what the at mass market size of humanoid robots will be. Like, there is, I mean, that's crazy to think we're only at $5 billion of a total market with robotics, humanoid robotics. Wow, this is going to be a $1 trillion+ industry in the next 5 to 10 years. I think Nvidia overall did a good job in, expressing their optimism about the future. I think most people reasonably can see that, this is just the start to AI, unless you're a total, AI bear or something, and who knows? You don't meet too many of those out there. It's hard to deny that AI is not the future. Humanoid robotics, self-driving cars, advanced AI projects are not the future. But overall, they did a pretty good job in expressing their thoughts about the future for Nvidia. There was one thing that I think is kind of the reason why Nvidia is down, or at least trading sideways in after hours. Coming in with a whopping $39.33 billion of revenue, that beat the average estimate of $38.05 billion, so about a $1.3 billion beat. Adjusted EPS of 89 cents versus the estimate of 84 cents, a handsome beat as well. Net income of $22.09 billion, gross margin of 73%, which also beat estimates. EBIT misses at $24.3 billion versus $24.53 billion. Estimate and Q1 outlook sees revenue at $43 billion plus or minus 2%. So what's actually crazy about this guidance is, yes, they're guiding up from $39 billion in this quarter, $39.33 billion, all the way up to $43 billion. The highest estimate was almost $48 billion for the guidance, and the lowest estimate was about $36 billion. So it was actually kind of in the middle of the low and the high end range for guidance. And here you can see the percentages. Q4 revenue up 12% quarter over quarter, up 78% year over year. Net income up 14% quarter over quarter, 80% year over year. GAAP EPS up 14% quarter over quarter, 82% year over year. Gross margins down 3 points year over year. Operating income up 77% year over year. Full year 2025 revenue of $130.5 billion, up 114% year over year. Full year GAAP EPS of $2.94, up 147% year over year. And gross margin expected at 75% in 2025, up 2.3% year over year. So really, all of this looks pretty good. It says record quarterly and full year revenue driven by strong AI demand. Data center revenue reached $35.6 billion in Q4, up 16% quarter over quarter, 93% year over year. Gaming revenue declined 22% quarter over quarter. Automotive revenue, which has been a lagging area, surged 103% year over year to $570 million in Q4. Nvidia says they're ramping up Blackwell AI supercomputer production with billion-dollar sales in first quarter, and the company did confirm its 1 cent quarterly cash dividend. And if you look at the average estimate from Wall Street analysts for next quarter's guidance, it was $41.5 billion. So $41.5 billion, they raised guidance by $1.5 billion. Not the $2 billion number that Nvidia used to do, but it's pretty good nonetheless. The one area that was not as good as expected was the gross margin that came in at 73%, which was down 1.6 percentage points from last quarter and down 3 percentage points year over year. Nvidia did try to say that they expect margins to rebound later this year. They said that on the conference call, but there was nothing super specific on that. Like, they didn't say in Q2 or Q3. They just kind of left it open for, at some point, margins will, return higher again. And I think that's part of the issue that the stock has right now. And Nvidia's gross margins are expected to be 71% next quarter, a sharp drop from 74.56% as was the estimate before today's earnings. Again, overall, I think Nvidia saved the day for AI, especially data centers and software and some of the most beaten down names in the past couple of weeks. Nvidia really came through. Now, the stock is already, $3 trillion company. How much upside do we really expect from these earnings reports? At this point, perhaps not as much, but we'll see. I mean, Nvidia could rally after this. There's nothing really, I think, to stop a rally. I think it's pretty clear. They're going to continue to beat and raise and have good quarters. Margins are a question, but at that point, are you just being nitpicky? Probably. Tesla is falling 0.55% in after hours. The stock was down 4% today on nothing. For no reason, the stock just declined. There was no bad news. Nothing happened. You just fell 4.5%, including the move today in after hours. I don't think there's really anything Tesla can do at this point. I think people are just really scared. A lot of people are ill-educated. They're misinformed on what's going on right now with Tesla. We actually haven't got any bad news for Tesla in actually a long time now. I guess you could say people vandalizing superchargers and writing, mean things on people's Cybertrucks is not exactly like great news. But how bad is that? Now, I say we haven't got any bad news because you gotta put this into context, okay? Think about how stupid people sound saying that Tesla's deliveries are collapsing globally. They're not, okay? The fact of the matter is, deliveries have slowed down in January and in February because the Model Y is the best-selling car in the world. Nobody is buying a new Model Y right before an upgraded Model Y comes out. Do you know Model Y deliveries, the new one, just started in China today? Just started today in China. So what are we talking about, this weakness in deliveries for January and February? It would be like buying an iPhone for an iPhone 16 at $1,000, but in 4 weeks, the iPhone 17 comes out and it's $1,025, right? Marginally more expensive. I mean, come on now. Is that really bad news? No, it's expected, right? We don't give Apple grief when their iPhone sales slow down a month before a new iPhone comes out. It's illogical. I think people just want to grasp onto anything to be negative on Tesla, to kind of get back at Elon for the people that, do not like what Doge is doing and ultimately trying to save the country's fiscal situation. So none of this matters as far as deliveries and the bad headlines. The mainstream media is misinforming people, and that's fine. We're going to profit from it. And in the meantime, unfortunately, I don't think there's anything Tesla can do. Tesla as a company, they don't have a PR team. They don't say anything about Tesla. Like, we need Elon to come out and say something on X about Tesla. We need an announcement. There's been like 1 million pre-orders for the new Model Y. Something dramatic to get Tesla out of this slump. We launched FSD in Mexico. We launched FSD in China. We started deliveries of the new Model Y. Model Q's coming faster than expected. Robotaxis launching in June of this year in other areas of the U.S. by the end of the year. FSD is going to launch in Europe soon. The new Megapack factory started operations in China. I mean, there has been so much good news recently. What do we focus on? Deliveries are down 45% in Europe in January. Do you know what that actual number was? In January of 2024, Tesla delivered about 18,000 vehicles to Europe. This January, Tesla delivered 9,000 vehicles to Europe. Tesla's stock has lost hundreds of billions of dollars in market cap value because their deliveries are down 9,000 in a month on a year-over-year basis. What? Sorry. That's a buying opportunity if I've ever heard of one. But from that perspective, if people are going to sell Tesla stock and just run with this bad news, this misinformation, if you will, and sell the stock off hundreds of billions of dollars in value, you may need to flush out here. You may need to fall to that 200-day moving average. Now, history would suggest that Tesla stock will bounce around right now. I mean, basically every time Tesla gets to oversold on the RSI, the stock bounces. This happened as recently as February 11th. This basically happens every time Tesla gets to 30 or under 30 on the RSI, which is the oversold level. Minus COVID, or when Elon was selling a bunch of Tesla stock to buy Twitter, minus major events or situations for Tesla, you normally bounce right at that oversold level. So history would suggest we should bounce, but I think people are just so negative. They're reaching for reasons to be negative that you may need to come down to this 200-day moving average. That might be the level in which we ultimately bounce at. That is sitting at about $277.59 per share. But honestly, I think this is a massive buying opportunity. I don't really like the idea right now of trying to time the bottom, because we will wake up one day and Tesla will be up 10%. I mean, when you get this sold off for no reason, you're down 40% from all-time highs. Reality is going to come back to people. That Tesla was at $488 for a reason. The stock has lost $200 per share. I mean, since December 18th. And nothing has happened. That's crazy, okay? This would not happen on any other stock unless it was Tesla, unless, it was Elon involved. People just love attacking Elon, okay? So, I don't know. This is a massive opportunity that I hope 6 months from now, if Tesla is a $600, $700, $800 stock, as I believe it could be, you guys don't have any regrets, because this may be the last big buying opportunity you get, unless we go into a recession or, something along those lines. I don't see it coming back here in the 290s when Robotaxi launches. As Optimus brings down Tesla margins, as Tesla continues to advance that and has Optimus working in factories and starting deliveries next year, it's really hard to make a case for Tesla to be lower than where it is today in the future. Really, really hard. Now, clearly, as you guys already know, I'm not the only one that is saying this. Hedge funds and institutions, big money, if you will, they're also very bullish on Tesla right now. They covered about 800,000 shares of Tesla stock today. So they are covering on short positions. That's, as good of a bull signal as you could ever get, right? I think we can all agree on that. With short interest sitting at the lowest levels you have seen in Tesla's business history. And we did get a new short interest number just released. Short interest actually climbed a little bit from 59.61 million shares sold short to 61.5 million shares sold short. Marginally moved the short interest from 2.13% to 2.2%. Still, this is like in the 98th percentile of how least short Tesla stock has been. And option activity today and really over the past couple of weeks continues to be exceptionally bullish, coming in today with a positive order value of 69%. I know Elon would love that. You had 843 different trades totaling $649 million. So, very healthy levels here. Nothing to complain with, especially considering the stock was down 4% again today, like 4.5%, including the move in after hours. You're just not seeing the same bearish positioning from big money. And bet your ass, hedge funds and institutions, they're like, Tesla's down $200 a share in 2 months for no reason. Oh, they're loving this. They're buying the fuck out of this. Now, tomorrow morning, as far as the economic data, we will get durable goods orders month over month. You are expecting a positive 2% number. Last month was negative 2.2%. So it would kind of be like canceling out the last 2 months. And we're expecting to be roughly break even for durable goods orders over that period. You will get the GDP growth rate quarter over quarter, second estimate for Q4, expecting that to come in at about 2.3%. The last update we had was 3.1%. 2.3% is right in line with the Atlanta Fed GDP Now tracker as well, which is tracking about 2.3% GDP for Q1. Now, this data is technically for Q4, but that's kind of trend where it looks like we are at as far as the economy. But if that number comes in low, then you're going to have a larger growth scare potentially on your hands. Initial jobless claims will be coming out tomorrow as well, expecting 221,000. Last week was 219,000. Fed bar speaks at 10 a.m., pending home sales month over month and year over year at 10 a.m. Kansas Fed Composite Index and Manufacturing Index comes out at 11 o'clock in the morning. Fed Bowman speaks at 11:45. Fed Hammock speaks at 1:15. And Fed Harker speaks at 3:15 p.m. tomorrow. You also have Fed Goolsbee that speaks late at night tomorrow at 10:15 p.m. And this really sets you up for your biggest data points of this week. Your core PCE month over month, expecting that to rise a bit from last month. Personal income expected to fall from last month. And personal spending expected to really plummet from last month. And it's your personal spending data that's really going to give you a growth scare. If that comes in low, people are going to get concerned about a recessionary economy, especially if PCE comes in hot and personal spending comes in weak. That's smelling like stagflation and would not be an ideal situation. You also have smaller data points like retail inventories, wholesale inventories, Chicago PMIs, and the goods trade balance that will also give you a new GDP Now update. Here you can see February 28th. That is on Friday. So we'll see what happens over the next 48 hours. Long story short, Nvidia earnings today, they were pretty good. And I mean, I don't think anyone's going to argue that. But the margin thing, I think, has some people on edge because, I mean, that's just Wall Street for you. As far as Tesla, stock selling off for no reason. AI story is intact. You can even see a lot of software names and data centers and after hours are doing very well based on Nvidia's comments. Tesla, though, I mean, as your biggest AI stock in the world long term, in my opinion, yeah, it's not doing anything. It's just selling off to sell off. Like you almost can't pay people to own Tesla right now. And that's kind of how it feels. Although at the same time, hedge funds and institutions, they're actually very bullish on Tesla. So it seems like a totally different world when you're looking at what hedge funds and institutions are doing with their money and what people are saying, like on X or in the comment section of this video. You're going to see a lot of people that are bearish. But if you look at what big money is doing, if you actually look at the money, they're buying this. They think this is an opportunity. And, well, can't really blame them. I think Tesla is going to be a $900 stock by the end of this year. $288 per share is a steal. I mean, it's down $200 per share in 2 months for no reason. That's phenomenal. You never get opportunities like this. It doesn't happen all the time, at least. So let me know what you guys think about this down below in the comment section. Do apologize a bit for just ranting here. It's crazy. I'm still mind blown that Tesla's giving us a discount like this. In fact, I'm about to go ahead and buy 10 more shares because you can't let this opportunity pass you up. So if you guys want to come join the trading community, check out that link down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.